Time for our 360 round. We're looking ahead to earnings for next week. For that, let's bring in our panel. We've got Eric Clark, CIO, Brands Portfolio Manager, AccuVest Global Advisors, and Larry Tentarelli, Chief Technical Strategist, Blue Chip Daily. All right, thank you both for joining us today, Eric and Larry. Appreciate your time. We've got a slew of names, a lot in the retail sector next week. Target, TJX, Home Depot. And then we've also got Palo Alto. Larry, let's start with you. What name are you looking forward to next week in particular?
Good morning, Diane. Palo Alto Networks is my focus idea for next week in the cybersecurity sector. It's one of the strongest stocks in the market technically, and the Zacks forecast is for 16% earnings growth, 14% revenue growth, and that's the stock I'm going to focus on next week.
Okay, yeah, revenue expected to come in at just above $2.25 billion for Palo Alto. Earnings expected to come in at 77 cents a share. Eric, what about you? What's your focus? Again, we've got a lot of retailers coming out next week. Walmart still gave a little bit of caution, worried about tariffs still a little bit, and going to have to pass those costs off to consumer. What's your focus?
Well, as a dedicated consumer brands investor, this is the meat of our earnings season. I mean, we have a bunch of technology with Netflix and Spotify, Amazon, et cetera. But, all these names are important. We just want to get a sense of, how consumers are still spending, where they're spending, what are they avoiding. So obviously, TJ Maxx is a big holding for us. So, it's at the top end of the range. I always get a little nervous when my stocks get into earnings, going a little bit too hot. And there does tend to be a little bit of a knee-jerk sell-off in TJ Maxx the last 2 or 3 quarters. That tends to be a good opportunity to buy it. But largely we're pretty focused on slivers of consumer spending versus broad parts of consumer spending.
I gotta say, I was in TJ Maxx, one of the verticals within TJX, and it was full yesterday, like so full I left because the line was way too long. So it looks like in terms of where consumers are making choices, that is one of the choices. I will say it was a different picture when I went to Target recently. So Larry, I'm curious to know your thoughts on some of these retailers. I know you're neutral on Target, you're neutral on Home Depot. What changes your view?
So I think for Target, they have a long-term turnaround process that they have to go through. It looks like earnings are projected to come in down 17%. Target is a real reclamation project. I'm not sure how long it's going to take them to get it turned around. Now, granted, maybe next week they surprise on earnings. Maybe the earnings aren't as bad as expected, and the stock could always gap higher in the short term. But the longer-term trend on Target is weak. Home Depot is a much more constructive chart. So TJX is my favorite chart also of these 3 retailers. But I think Target has a long-term turnaround process underway that they need to get going.
Yeah, it looks like Home Depot has certainly been fighting off the mat this year. Like when you look at a chart, especially compared to, a little over a month ago where we saw the whole market sell off, it matches that. And you're seeing this kind of steady climb higher. So we'll see if Home Depot manages to beat the expectations next week. So Eric, okay, you mentioned you like TJX. Do you share similar views when it comes to Target, especially given, look, it feels like for Target, some of the problems that they've had, as Larry mentioned, have just been going for a while now. They have some idiosyncratic problems, along with that shift that they experience of their consumer leaving them and going to Walmart, essentially the 6-figure income shopper. What are your expectations when you think about Target?
Well, I think everybody's expectations are low because they have set the bar really low. They have a good quarter. People think, okay, there's a sigh of relief. The business is going to get back on track. And then the next quarter is dreadful. So until you can put together a couple of quarters of consistency, people are just going to avoid the stock. And, it is absolutely optically incredibly cheap. I mean, compared to Walmart, compared to Costco, but it's a bit of a value trap until they put together these strings of better returns and better earnings and better margins and stability within all those operating metrics. And until then, it's a bit of a wait and see, type of approach, because they clearly have lost share. Amazon, Target, Amazon, Costco, and Walmart are really, share takers here, and Target's, struggled because of it.
Yeah, it's interesting to see that. You make a great point about even Amazon as a share taker. But one thing that was interesting recently with Walmart's results is the progress they've made with e-commerce, because that's one of the things that they're obviously trying to develop more, especially when you think about the market share that Amazon has there. We'll have to leave our conversation there for today. Look forward to diving into the results next week. That's Eric Clark, AggiVest Global Advisors, and Larry Tentarelli, Blue Chip Daily. Thank you guys both for joining us. Have a great weekend.